Welcome to the daily update, where I'll go over the action in the market for Tuesday, November 26th, and we'll see how things look for Wednesday, November 27th. Set an all-time high with the Dow and the S&P, even though the broader market was weaker. We saw prices decline with the small caps and the mid caps, some profit taking that took place, but we saw the big stocks, the Magnificent Seven and the large cap growth, hold up fairly well. And the Magnificent Seven stocks themselves actually shot higher more as a group. And that's kind of what we've been concerned about. We weren't seeing a lot of strength in that area. And it's not really changing anything that much yet, but the overall picture still remains positive. We have a really long list of economic reports that will be coming out on Wednesday. Volume dropped below average on Tuesday. We'll have to see how it turns out on Wednesday. Of course, the market will be closed on Thursday for Thanksgiving and an abbreviated session on Friday. So we'll just kind of wind into holiday mode here and still maintain more of a positive stance for the time being. Before I get into the video, there's a thing called the SPX Investing Program. It's up, it's going. I developed this program. It's free until the end of 2024. So feel free to check that out. There's a link that will take you to the website as well as to a video. And one of the benefits is you get access to the videos immediately after they are available. And the daily video is really what I focus on as far as my analysis and commentary. All of the other videos that I do throughout the week are meant to tie into the daily video. All right, let's go back and talk about what happened at the open. We had a higher open. We got above 6,000, but then we retreated right off the bat. We saw some selling into strength there. We fell down below 6,000 before climbing back above 6,000. Then we chopped higher. There wasn't an awful lot of conviction, but for the most part, the S&P ended up just kind of moving its way higher. It went above R1 at 6,017, and we closed slightly below 6,025. We were up 0.57% on below average volume. So more holiday mode going there, where I thought Monday's session might also see below average volume with no economic reports. Well, we had a few more economic reports on Tuesday, but we did drop to below average. We are positive in the short, intermediate, and long term, showing a lot of improvement. We're also dealing with some positive seasonality. Interest rates did tick back up after really falling in Monday's session. And there's talk that the ceasefire between Hezbollah, or if you want to say Iran, and Hamas and Israel is actually starting to kick in. We'll have to see how long that can last, but that's helping that situation a little bit. Still, developments between Russia and Ukraine, that's still going on for the time being. And a lot of the news still seems to be about picks for the cabinet. And I guess Trump has pretty much selected everybody that he wants. Whether they're going to be confirmed or not, that's up in the air. And some people agree with some of these picks and some people don't. Okay, so some comments. Both the Dow and the S&P set all-time highs, while small caps and mid caps saw some profit taking. And then there's a lot of tariff talk right now. And for the most part, it's being taken as negative, but not having all that much of an impact either. It might have some kind of a short-term impact. After the announcement was made on Monday, the S&P futures dipped down, but then came right back. And so more talk about this may have some negative impact on the market, but it seems to be more short-term at this time until it gets a little bit more specific. And we're looking at an increase in tariffs with Canada, Mexico, and China. Israel and Hezbollah. This should begin on Wednesday. It's supposed to be beginning right now as I record this. And the FOMC meeting minutes really didn't contain any surprises, nothing that the market didn't already know or anticipate. Mega caps and growth did have a pretty good day in Tuesday's session. We do have a non-confirmed Hindenburg omen. We'll have to see how that plays out. And a little bit longer with our short-term list, which could suggest good short-term momentum here with the Stochc RSI, Williams percent R, just the CCI 14, the stochastics on all three charts now, and the 20-period simple moving average study. Those are looking extreme positive. In the intermediate term, we just have the Sean trend meter, but been on the list for about a week now, and it isn't showing an awful lot of strength. It actually pulled back down. Now it's starting to go back up. And we're just kind of watching this slew of economic reports as they're being released. Are they stronger than expected? That's been kind of the overall consensus right now. And this is raising doubts about whether the Fed will be able to cut interest rates in December. The dollar was up and interest rates were also up. We closed at 4.3% with the 10-year yield where we had been at 4.27%. And we're back to being uninverted again with the 10 to the 2-year. After Monday's session, we gone back to an inverted type of chart, and I'll show you that. Now we're back to being uninverted again. So maybe it was a one-day anomaly type of thing here. We are positive with sentiment at 64, where we had been at 61. And we're still not trending. We're getting very close. In the short term, we're just about ready to cross above the moving average, which would suggest a strengthening trend. But we're still below 20, both with the short and intermediate term chart, and I'll show you those. With the update, our bias is positive and our momentum continues to be positive. And momentum is the last 2, 3, 4, 5 days taken together. All right, the economic reports that came out, the FHFA Housing Price Index was up 0.7%. Last time it was up 0.4%. The Case-Shiller Home Price Index up 4.6%, a little bit less than the 4.7 they had expected, and down from the 5.2% we saw last time. Consumer confidence, and I have a couple of charts to show you which are really kind of saying the same thing. Folks are pretty much anticipating that the stock market's going to go up. There's a lot of people thinking that, and that's a little bit dangerous when you get people that don't really understand the stock market. They just see it going up day after day after day, and they go, oh, yeah, it's going to continue to go up. Well, consumer confidence came in weaker than expected. They thought it would come in at 113. It came in at 111.7, but up from the 109.6 that we saw last time. New home sales were weaker than expected at 610,000. They expected 718,000 and down from the 738,000 that came out in the last report. So here is a chart of the housing price index month over month where it's still going up. And we've seen that since the summer months. And this is the Case-Shiller Home Price Index where this shows it actually coming down on a year-over-year basis, also declining here. And here's consumer confidence, where we look at the blue line, that's the total reading, where it was coming back up after it had been dropping off. And how people are feeling right now, the purple area, that's showing a bit of an improvement. And then expectations for the future, that's the yellow or gold line here, that also saw an increase. And new home sales came in. This is a seasonally adjusted annual rate here, where not much of a change right there on the chart that we see here, but the 3-month average on a year-over-year basis did see an increase. And then looking at Isabel Net blog charts, this is the overbought, oversold composite. We're getting up above 90 now, so that's looking a little topsy as far as this chart is concerned. And then the S&P's rise this year has been one of the strongest since 1928. And of course, all of you remember 1928. The only problem with 1928, it was followed by 1929, which ended up having a really bad stock market crash. And then that led into the depression after that. But for right now, everybody seems happy. And then, like today, 18 months to late 2021 saw a relentless move higher for equities. And then this is what we're seeing here. But and you're seeing a little bit more of this. I go over this every week in the intermarket analysis video, but this is just showing CAPE. When we get above this line here, it just means that the market is expensive. But we've been expensive for a long time. And I don't use this as a timing mechanism because we can stay overvalued for long, long periods of time, and you'll miss out on a lot of gains if you use that to time when you're actually going to get in. It may work better for sectors and individual stocks, but when you look at it at the index level, It's just good to know this, but not really use it as part of the decision-making process. And then Bitcoin, and it had the RSI. This is a relative strength index. And there's a couple ways you can look at this. Now it's pulling back. It didn't quite get up to 100,000 yet. And the RSI is really overbought at this point, but that can also show good momentum as well. There's usually two ways to look at these. And Bloomberg put this out, and we're seeing that pulling back after it had a nice little run lately. And then 2025 is the projected here, the federal spending. And the thing that's kind of causing a concern, yeah, we have all the programs here, and this may get slashed as the new administration comes in, but it's the interest that's really starting to cause a problem, where it's a lot higher than some of the other areas of the overall budget. And then Bloomberg dollar gauge typically pressured in December. Just be aware of that. We've been seeing a really good run with the dollar lately, and it's been showing some real strength. But in December, according to Bloomberg, sometimes it goes down. And then bond fund flows over the last 4 weeks, just all these different categories where we're looking at either inflows or outflows over the last period of time here. And then this actually went inverted after Monday. It's back to being normal now. This is the 10-year to the 2-year spread. And when we drop below this line, which means we've gone inverted, that will often signal a recession somewhere into the future, usually about 6 months or so. But it was inverted there for quite a while. Now it went back to being uninverted. Now it's back to being uninverted again. So we'll see. So far, there could be a recession. And I've heard a few people, some that I respect, some that I don't, that are going to say, oh, after Trump comes in and takes office, we're going to be hit with a recession. Okay, well, you can pull pretty much anything out and use data to justify where we're at. We just keep watching the charts. All right, did find some interesting things here. This is on the back of the consumer confidence survey that came out, where 56.4% think that the stock market is going to go up. I mean, if we could get this kind of, are we coming back together now as far as having the split in American culture these days? This seems to be one of the things they agree on. Unfortunately, when it gets to be this kind of higher reading, usually the opposite is what ends up happening. Here's another look at that same chart, a percent Americans who think that stocks are going to go up, and it's a very high reading. And then we're seeing a lot of stock sales. This is put out by the Financial Times here. You can tell by the different color. But a lot of corporate executives are selling their stocks right now as we're hitting all-time highs with the S&P. Now, there's other charts that we look at that aren't really showing a real problem right now, so you can look at different sets of information and reach different conclusions. Then here, probably the most important indicator of all. The S&P is higher with a daily return when the McRib is available. So you can see the performance in red when there is the McRib and in blue when there's not a McRib. And that's coming back, I understand, at the beginning of December. Okay, here is the intraday chart. We did have a higher open, and then we saw some selling into strength right off the bat. Very common. Not enough to really fill the gap. We didn't even get down to the daily pivot, and then we started to bounce back up. Things leveled out a bit, and then we had the Fed, the meeting minutes coming out. There was a little bit of gyration, but not much after that. But then we were able to continue to go higher, and we closed just a little bit off of the high above R1. And not much of a change in the initial overnight session. We did see that you can see here where we were going up in the initial overnight session, then the Trump tariffs announcement was made, and we just really went down, but then we were able to repair that and actually end up having a positive open. And even with growth having a fairly good day compared to value, we're still seeing the red line above the blue line. So on an intraday basis, value is still outperforming growth. And a little bit of a bounce here. We're getting back up to a little bit above where we were in Halloween. And as I've been pointing out here, we want to see the growth to value ratio going up. That means that more growth stocks are in favor, but it's not necessarily the end of the world if it doesn't. It's just that We like it to do this because it helps the S&P to really perform better. On an end of day basis, growth was up 0.9%, where value was up, but barely. And it was down less for the mid caps and down a little bit more for the small caps. So looking at our growth to value ratios for the small caps came down a little bit, really seeing an improvement here, but still in a downtrend. And a little bit of a tick up here with the mid caps, but still in a downtrend as well. And still in an uptrend and not that much of an improvement, but we've been holding together for the most part here when we look at the end of day chart with S&P growth to value. And coming back up a little bit into the higher end of the rainbow when we compare the growth to value ETF. Discretionary pulling back a little bit after it's had a really good run when we look at the discretionary to staples ratio. And we were up 0.8% with large cap growth. Not an all-time high, but still looking pretty solid here. And we're just barely trying to cross above the moving average here with the ADX. If we cross above that, that will show a strengthening trend. If we get above 20, that will mean we're in a trending environment. If the green line stays on top, that would mean it's a positive trend. And we're also getting just about at the crossing point here with the short-term ADX chart. And also, below 20 could get above the moving average, above 20 with the green line on top. That would be short and intermediate term positive. And we're dropping off to below average here with volume. Not a real surprise there. We came down with the VIX, both with the line chart and the bar chart. And the VIX of the VIX is also declining with the bar chart and the line chart here. The momentum is turning back down as measured by the MACD as the VIX has been coming back down. We're into the low 14s now. And seasonally, this is what we typically will see with the VIX declining as we finish out the rest of 2024. We're still getting a very high reading here with the SKU index. It continues to go up. And so the market is still expecting some kind of a big move. Whether it's actually going to play out this week, we don't know. But there's a lot of positioning going on that something is expected. And we ticked back up with this one fear gauge where we ticked down slightly with the other fear gauge. So a bit of a non-confirmation there. We were pretty much flat with the daily chart of the equity put call ratio. We're going down with the 5-day and we're dropping below this extreme reading now. So that's when I bring up this other chart, just to give you a little bit of context. When we finally bottom and start to go up, sometimes that can mark a top in the market. So we want to keep an eye on this one. And we're barely still going down with the 10-day equity put call ratio, showing that there's not a lot of fear with the volatility risk premium. We're below the band. And we're setting an all-time high with the advanced decline line based on price and volume. So that's being confirmed by what we're seeing with the S&P. And even though the new highs dropped off, we're starting to turn back up with the 5-day and the 10-day, but we're seeing a lot more new highs than we are new lows right now. And that's an internal measure that's more positive. Still looking positive here with the advanced decline rate, the advanced decline ratio based on 19 and 39 periods. And possibly getting a little extreme with the accumulation distribution. It went back up and it's above the moving average, but this boom indicator tries to measure how far away the indicator is from the moving average. So we could still go up a little more than where we're at right now, but we just, again, want to be aware of this one. And the chicken money flows continuing to look more positive. So we have two of our smart money indicators that are positive. And going back up after declining a little bit on Monday is the chicken oscillator. So all three of our smart money indicators are positive. We're a little bit concerned because we're getting up close to this red line here, which sometimes marks a top here, but it could still go higher as well. And we actually declined a little bit with the vortex, with the red line coming up, but this is still positive. And with the cumulative advanced decline line for the S&P setting an all-time high, both based on price and volume. And it's a little hard to see here, but the S&P went up where the NYSE advanced decline line actually went down. And so that just shows the S&P outperformed and came down a little bit with the cumulative advanced decline line for the NYSE. Ticked down a little bit, but still looking positive with our regular NYSE advanced decline line. The other advanced decline line also ticked down, but still well above the moving average. The cumulative, or I'm sorry, the common stock based on price coming down after setting an all-time high, also based on volume. And the advanced decline line saw a little bit of a turn down with the NYSE common stock, pretty much flat, but setting a new high with the S&P, down with the mid caps and the small caps, but still looking quite positive. Coming down after being extreme with the 20-period simple moving average study. These are stocks inside of the S&P that are above their 20-period moving averages. And coming down, but still looking pretty solid here with our 20-period moving average study. And tick down a little bit with the 50-day, 100-day, and 200-day moving average study. And we did set an all-time high here on a closing basis as well as on an intraday basis. So we're still looking pretty solid here with the S&P. On the bottom, we dropped to below average with volume. And we're no longer extreme with the 20-period exponential moving average, came down with the 50, and we're flat with the 200-period moving average. Starting to get into extreme positive territory with the Stochk RSI, which again could suggest good short-term momentum. We're already there with the Williams percent R showing good momentum or extreme positive readings, and just barely above 100 with the CCI 14, going up but not extreme with the CCI 20. And the stochastics in the short, intermediate, and long term are starting to look extreme positive here, which could also suggest good momentum. The force index is still positive. We're back above the green line and the blue line here. The condition of the short-term trend still is improving, and we're still well above the simple and exponential moving averages based on 20 periods. Could be getting a little extreme as we measure the distance from price to the 20-period moving average. It's starting to get a little toppy here. Not quite there yet with the 50-period moving average and still holding up with the 200-period moving average. And we're still right at the upper end of the +2 channel with our standard deviations chart. So this is not extreme. And coming down, but still positive with the balance of power. Still looking better here with our intermediate term trend based on 50 periods. We're above the red line and the blue line. The go, no go is dark blue. That's positive. Coming up here, well above the midpoint. Now, the blue line is starting to flatten out here a little bit, but the highest high value is still looking pretty strong. The TTM squeeze has the darker blue, and that's continuing to go up. That's positive. We're declining, but still above zero with the ease of movement. And the Arun ticked up just a little bit above zero with the oscillator. That shows that the buyers are increasing as the sellers are decreasing. And coming down with the S&P McClellan oscillator after it barely got up to about the 60 level, but we're still going up since we're above zero with the McClellan oscillator. The summation index based on price and volume continued to go up. Coming down, but still positive with the NYSE McClellan oscillator. So we're going up with the summation index based on price and volume for the NYSE. Swenlin trading oscillator, advancing based on price and volume here. Looking good, turning back up, and we're seeing a real improvement with momentum where the PMO's turning up. We're actually looking a little bit stronger here based on price and above the moving average based on volume. And we're seeing the PMOs that are rising, giving us a very high reading. The buy signals are going up, and we're going up slowly, but still going up nonetheless with the PMOs that are above zero. And the short-term oscillator slope starting to turn and go back up here. The MACD is crossed to back above its moving average. So in the short term, turning back positive. Intermediate term oscillators are improving, and we never did go negative with our long-term oscillators. But we're starting to cross below the moving average with the Copic curve. This is kind of showing us a little something different than what we're seeing with our other oscillators. Coming up extreme, but not really extreme here with the, excuse me, with the Sean trend meter. And coming down a little bit, but still positive with the money flow. Going up still with the ultimate oscillator. Above the moving average with on-balance volume. And the RSI 14 and 9 still continue to be positive. Just getting a little bit extreme here with the short-term RSI. We're positive with the Elder's Impulse system for the S&P. The parabolic SAR has the dots underneath. That's positive above all the moving averages that are plotted here. Going up with the bullish percent index, going up with the NYSE bullish percent index and the NASDAQ 100 bullish percent index. And we're right on this line here, where if we go above this, that'll start to get extreme positive. And getting the Pring bottom fisher, crossing back over and actually giving us a buy signal after we had been chopping sideways that week after the election when we pulled back. No really support or resistance levels right now, but the hike in Ashy, looking at the condition of the trend, is still positive here. We're positive with the Kagi chart, positive with the Renko chart, and we had been negative, but we're starting to turn back positive again with the three-line break. So we're seeing confirmation there on a trending basis. Long term, and this is where I added the 400 level in this chart now. We're not up to that level with the 150 or 200. Still positive across the board with the Keller market model on all time frames with all the indexes. And we're negative across the board with commodities on all time frames, where bonds have now switched over to positive in the short term and long term. They're still negative in the intermediate term. The dollar is positive across the board on all time frames. And we just saw two sectors down, energy and materials, where we had utilities bouncing back. They were the strongest area. Healthcare, another defensive area, but tech had a pretty good day there. And discretionary was up, but not as strong as staples. That's why we saw that ratio going down slightly. And an awful lot of blue or green here with the S&P getting above 6,000. Then Nasdaq got above 19,100. And then the euro had a bearish MACD crossover, which is positive for the dollar. Um, oh, it's a moving average crossover there. And the euro got back above 105. Canada's still looking good. The S&P setting an all-time high. Discretionary has a BPI above 80. Real estate's getting a reading above 70. And the Dow also set a new all-time high. And so we saw the S&P going up, the weighted version, where the red line, which is the equal weight version, actually declined slightly. The Dow setting an all-time high and positive with the Elder's Impulse system. Still having a hard time getting above this pivot point here with the Nasdaq. That would be more positive if we could break through and close above that. Also hitting overhead resistance with the Nasdaq 100 that has not been able to be cleared yet, but positive with the QQQs with the Elder's Impulse system. Still negative with the Nasdaq 100 momentum, but it's trying to turn back up and pulling back with the small caps and the Russell 2000 small caps after getting above 70 with the RSI, pulling back here. Momentum is still positive for the small caps. Still positive though with the Elder's Impulse system for the small caps and pulling back with the mid caps. Still positive though with the Elder's Impulse system and setting an all-time high with the Wilshire 5000 and an all-time high with the total US stock ETF. Financial sector setting another new all-time high. The FANG index not an all-time high, but was up over 1%. Still below the shorter-term trend line, still above the longer-term trend line. Apple was up 0.94%. Amazon up over 3% after seeing some profit taking there. Google still bouncing up off of its 200-day moving average, up 0.88%. Microsoft bouncing back above its 50 and 200-day moving average. We're still watching this to see if a death cross is going to happen here. Meta was up 1.49%, breaking a little bit above its 50-day moving average. Nvidia was up 2/3%, still holding above its 50-day moving average. Tesla was down 0.11%. And Netflix was up 0.81% after it had been seeing some recent profit taking. Still seeing an improvement in the short term between US and world stocks, but a longer term deterioration of the correlation. Oil dropping down just a little bit more now as things seem to be at least appearing to have a ceasefire in the Middle East. This is what we're also watching. We were down 1.3% with semiconductors, and that's a concern to us. We're below both the 50 and 200-day moving averages, and this sector is looking weaker. And that's a concern for right now. And the dollar actually bounced back up a little bit, but it's down a little bit in the overnight session here. And we're just about ready to see a golden cross with the dollar, with the 50 crossing above the 200-day moving average. And we were up with the 10-year yield. We were down with the 10-year based on price. And after dropping back below this blue line, we've now gone back above it with the 10 to the 2-year yield curve. So it's no longer inverted. And not really seeing all that much of an improvement here with the Qs to S&P. Discretionary to the S&P still looking solid here. Turning back up, it's still below the moving average when we compare large cap growth to large cap value. So a little bit of an improvement with the large caps. We were flat with the mid caps and decline, but still looking pretty solid with the small caps. So what's our outlook for Wednesday? Haven't changed this. We're still positive when you take everything together, and we have a period of positive seasonality. This is the big list that we're gonna get for Wednesday's session, the MBNA Mortgage Applications Index, but we get that every week. Personal income and spending, PCE prices, and core PCI. That's going to be the big one. We'll see how the market reacts to that. We're also going to get weekly jobless claims as well as continuing claims, durable goods, the advanced international trades in goods, retail, and wholesale inventories. Not a big impact there. And we're going to get the second reading of GDP, which could be big if the number's big than what we saw the first time, and pending home sales, and then keeping an eye on all the geopolitical things that are either in the background right now, and this is a holiday weekend coming up, and crazy things can happen. I know it's about food, football, family, and friends, but sometimes weird things may occur. I really hope not. And we will be closed on Thursday for Thanksgiving, and we're only going to get the Chicago PMI on Friday. Here's a look at the economic report calendar. Then seasonality, we are positive for November 27th with the Dow, S&P, and NASDAQ. And I've been showing this and probably will for a little while. Tuesday before Thanksgiving, then into the second day of the new year, we are positive going back to 1950 with the S&P and with small caps. And seeing some pretty good seasonality here. There might be a little bit of a downtick on the last day, the last trading day that we'll see, but we are in a period of positive seasonality now. And this purple line here is just showing how no matter how they measure it before, 2024 is just massively outperforming. And then November can be weak now and then rally late. That's kind of what we're seeing right now. Wednesday in 2023 was the most negative day of the week, but in 2024, it's positive. All days are positive so far in 2024. And we're in that window now, according to the Tom Bowley research, where we have positive seasonality by looking at this. And this is a newer chart. Stocks tend to do well in December of an election year. So we're starting to look ahead where we are up 83 and a third percent of the time with a 1.3% return if we go back to 1950. And this also shows positive seasonality going into the end of the year, as well as the post-election seasonality that we see. And then this is what happened back in 2020. So we are a little bit concerned that the Copic curve is turning negative, but all the other momentum oscillators that we look at are improving. And we're still seeing that the NASDAQ 100 momentum is negative. And we do have a non-confirmed Hindenburg-Ullman. Then we look at the positive side. Our smart money indicators are positive, and we're looking positive with the McClellan oscillators and summation indexes for the S&P and NYSE, the Swenlin trading oscillator, the Vortex, the 5 and 10-day equity put call ratios are going down. Growth to value is holding up. Discretionary still holding up fairly well when compared to staples. Our oscillators are improving and turning positive. The advanced decline lines, especially for the S&P, are holding up fairly well. The moving average studies that we look at are positive. The parabolic SAR, the bullish percent indexes that we look at are positive. Ease of movement, money flow, the ultimate oscillator, and way at the bottom is the financial sector. I don't know why that keeps getting chopped off. I usually adjust that. We do have a confirmed Hindenburg-Ullman. If you're not familiar with that, here is the 1, 2, 3 criteria for a Hindenburg-Ullman. And here is the chart. We have not had a confirmation yet. The initial signal was triggered on November 20th. We have until December 19th to get another spike up here before this one will fall off the books. So our conclusion, we are positive. We're not trending, but we're getting really close. We're starting to see the ADX turning up in the short term and improving a little bit above the move, or trying to get above the moving average in the intermediate term. So we are positive though, and we have positive seasonality. In the short term, we're getting really close to starting a trend and showing an improvement with positive seasonality there. We're also improving as far as the trend, but still looking positive in the intermediate term. And we are continuing to be positive in the long term. Thank you. I hope you have a really good day, and I will talk to you in the next video.